Hey, what's up guys, Houston here. And for those of you just finding my YouTube channel, welcome. Please remember to hit that subscribe button and that bell. And for those of you that's been following me, supporting me, as always, salute. And those that are my faithful patrons, double salute. Now, today's video, we're going to actually be talking about how to fix bad credit. But here's something I want to touch on so that you all are aware of. They started rolling out where they're texting you if you owe a debt collection, okay? And because they're doing that, this is what I want you to do. When they text you, hey, so-and-so, we tried to reach you by letter, please call us at this number, you using this reference number, then what I want you to do, you're gonna text back the word stop, S-T-O-P, that's all, S-T-O-P, you're gonna use capital letters for that. The reason is, once you send that in, it's gonna go back to the call center and they can't contact you anymore. Now, if they do contact you again, trying to tell you to contact them or whatever, I need you to make sure for both situations is to do a copy of the confirmation that they said they was going to stop, and then if they send it again, make a copy of it. Because why you want to do that, that's going to give you the legal right to sue them. Okay, so you're able to have leverage on the collection companies if they if you send the word stop, S-T-O-P, in capital letters. All right, it'll give you a reply. Okay, you're not going to be sent a letter from this call center. Make sure you do a screenshot if you receive any other notification from them. Okay, through a text, you screenshot that. Then you're going to file a complaint with the FDCPA, excuse me. You're gonna see the CFPB. You're gonna file a complaint with the CFPB, but you also gonna file a claim with the Small Claims Court, letting them know that they harassed you when you asked them not to communicate with you, because they're breaking FDCPA law, okay? And because they're breaking FDCPA law in the Fair Credit Reporting Act, you have a right to sue them, okay, on the debt. So that's number one that I need you all to understand, because I know it's a lot of people that are getting these calls and they don't know what to do. So now you know what to do. Number two, okay, let's talk about fixing the bad credit. And as a matter of fact, let's talk about getting approved for credit first, and then we'll talk about some of the things that you can clear up on your bad credit. Now, number one thing that in terms of when lenders, okay, when they're looking to extend your credit, when they're looking at your credit file, they may be looking at the time you've been on your job. They may be looking at the time you've been at your address. Three things that you don't want on your credit file. You don't want to say that you're on Social Security disability. You don't want to say you're retired, nor do you want to say you're self-employed. Okay, that's very important if you're trying to get approved. Now, that brings me to the first thing that you have to think about in terms of when you're trying to fix your bad credit, and that's actually pulling your credit report. The reason you want to do this, okay, because you may have a relative, okay, that may have the same initials as you at the same address. And sometimes collection companies, because they have the same initials at the same address, they may put their debt on your credit file and it'll drop your credit score. Okay, so that's the reason you want to pull your credit file to see what's going on. Another thing that you want to also think about is paying attention to the inquiries. The reason is because people out there, they're using these things called CPN numbers, okay, credit privacy numbers, right? So they're making up these numbers, and it may be your social that they're actually using to get credit. So then when they default on that credit line and stuff, it'll show up on your credit file because that's your social. So that's the reason you need to check your credit file, okay? It's very important, as well as your kids' credit file. All right? Now, that being said, let's talk about another thing that's very important. And people have done this. When adding AUs, okay? When adding AUs, authorized users. Now here's the thing about it. When adding AUs, say that you have a spouse. Now your spouse just got approved for a $10,000 credit card, right? And then they add you immediately on as an authorized user. That's not going to help your credit because the account is too new. Okay, so when somebody says, oh, I got this account approved, let me add you on or whatever, trust me, it's not going to impact your credit, okay? But I'll tell you something that will impact your credit negatively, and this is what you want to do. Now, say that you had a loved one that had added you on as an AU. Your credit score went up, but then they started missing payments. Now, when they start missing payment, it reflects your credit score. So what you would need to do is get on the phone with that financial institution and request that they remove you off as an authorized user. Okay? When they remove you off as an authorized user that's went bad, their accounts went bad, then you would see an increase in your credit score. Okay? So that's the reason that you want to do that. So it's very important because a lot of people think that, oh, I got this authorized user on here, it's a bad account, but I don't know how to remove it all. All right, so you just call a financial institution. All right, so that's how you remove that off. Now, here's another one. Late payments. Okay. Now, here's the thing. Like with some lenders, they may do a mercy, and if it's 30 days late, they may do a mercy and remove it and report it as a non-data. But usually on a late payment, on 30 days, if you're 30-day late payment, you can lose anywhere from 40 to 80 points, okay, on a late payment. If that late payment goes 90 days, you're going to lose about 100 points. All right? But one of the things that I always tell people, if you can, protect the account, preserve the account, make arrangements to make payments on it, but do it at all costs. Make payment arrangements, okay, to preserve the account. Now, here's something. Now, if you're an individual that has multiple credit cards and stuff, and you're on a limited budget, but you want to keep your credit good and stuff, this is how you do it to increase your credit score and to keep the account. Okay? It's called the debt snowball. Okay? And I've talked about this in other videos, and something that Dave Ramsey talks about, for those of you who know who Dave Ramsey is. So say with the debt snowball, you have a $100 bill, you may have a $300 bill, you may have a $500 bill, and you have a $1,000 bill, right? And so what you want to do, don't worry about the interest rate at this point, okay? You want to just focus on the amount. So what you're doing, you making minimum payments on these here accounts, okay? You're going to make minimum payments on these accounts until you get this account paid off. This is very important because once you get that account paid off, guess what? Again, it's going to help your credit score. And then you move down to the next one. And it also gives you a psychological effect that you're actually making progress. Okay? So you're actually really doing something. I know there's another method where they say focus on the interest because it'll save you more money. Yes, that's true. However, if you want momentum and to keep with it so you can build your credit score faster, the debt snowball is your best benefit. And I'll tell you another reason why. Because once your debt is paid down, then you can request an increase in your credit cards, okay? And that'll also bring down your debt to income ratio, and it give you more leverage, and so also giving you a boost in your credit. So that's just a few things that I would tell you to do. If you're trying to get a 200 boost, 150, 200 boost in your credit score, that's just a strategy that I would use in order to benefit from. Now, here's something I want to tell you about late payments. And it comes to medical bills. Most of the time, medical bills will not report on your credit anywhere from 60 to 90 days. So if you had a medical bill, let me explain about medical bills. So when you have a medical bill, you have a bill for using a facility, a bill for co-payment, a bill for seeing the doctor, and then whatever else, right? And for most of the time, your insurance will cover a lot of it. But sometimes your insurance may not cover the smaller bills. And so that's the reason you'll end up with this small number. Now, the good thing about FICO score is that with medical bills, it's not being calculated into your credit score anymore, okay? But in terms of like when you look at your Vantage score, when you look at Credit Karma and stuff like that, your medical bill is still being counted in. So you do need to know this and understand that, okay? Now, here's one other thing. If you guys are a member of Navy Federal, okay, and say that you had a credit card with Navy Federal, you went by 30 days, it's approaching 60 days, don't go past 60 days because they will report as a negative. Navy Federal tries to be real flexible with people. So if you miss 30 days, at least try to get it within that 45, I would say to 50 days to make that payment. You don't want to ruin your relationship with Navy Federal. So that's the reason, like I said, if you miss a payment, they'll go up to 60 days without reporting to the credit bureaus. But again, I wouldn't want to risk ruining the relationship. Even if you have to just make the minimum payment, then I would prefer you do that than ruin the relationship with Navy Federal. Okay, they're a very good financial institution, and they give you it would definitely give you leverage and access to more capital the longer you're with them. Okay, now here's another thing. Closing accounts. Alright, so you may have like a First Premier, you may have like a Surge account. These are accounts you may have for 2 or 3 years, right? Okay, and you don't use them anymore, but they're just charging you a fee. Do not close that account. The reason is, unless you have other strong active accounts, if you close that account, you're hurting your credit history. Okay, and most people are not aware of this because they're like, oh, it's just a low limit credit card. Yeah, it may be a low limit credit card, but because of that impact of the history, it can screw you up. All right, so that's the reason that you don't want to just close the account. All right, so just make sure, look at the account. If it was just less than a year old, then I would say, okay, it's fine to close it. But when it's at least 2 years old, you have 2 years of credit history. That's the reason when you pull your credit report, most of the time, a lot of times you would see that the credit reports, they would only show 2 years of history. They may show the time period when you actually open up the account, the last activity date, but in terms of monthly reporting, they'll usually show up to 2 years, okay? So that's the reason you want to make sure that the account that you're closing is under a year, because if it goes over 2 years, then you definitely can hurt your credit, especially if you don't have a whole lot of credit, all right? So that's very important. Now, here's something that most people don't even know, that debt settlement. All right. Now with debt settlement, excuse me for that, but with debt settlement, here's the situation. Say that you have an account that's $10,000, all right, and the company agrees that, okay, we'll take $3,000, right? So they'll take 30% of it. Well, the thing about it, because you didn't actually fulfill your full obligation to pay the $10,000, then that's going to hurt your credit. And a lot of these debt consolidation companies, they don't tell you that. Another thing, you have to be careful when using a debt consolidation company, because they won't make those payments on time, and that can wreck your credit as well. Even if you're in bankruptcy, if you're in a chapter 13 restructured bankruptcy or something like that, then and you're paying on that bankruptcy, they're not making your payments on time. Okay, and it will screw you over because they're not paying the creditors, so the creditors will still continue. Even though it's in a bankruptcy restructure, they will still report it as late. So you have to be very careful when dealing with these debt consolidation companies. Okay, it's very important. Now, here's something else that you do need to understand in terms of if you're trying to fix your credit. We talked about hard inquiries and stuff like that. I had a client, he had some hard inquiries from over a year ago. Well, here's the thing about it. Hard inquiries don't impact the credit usually after 9 months, okay? So usually after 9 months, that hard inquiry isn't as impactful on your credit as if it was fresh maybe 6 or 7 months, all right? So that's the reason, like you can call a credit card company, or the credit bureaus to challenge it or send in a letter. Now, here's something that people, and I continue to encourage people, do not do this. If you get approved for an account, once you get approved for the account, and one of my associates, he screwed himself back royally for it, okay? Because he got approved for an account, and they let him keep the account, and he challenged the hard inquiry, but the account doesn't show up. Yes, he got the account. He doesn't, but he got the hard inquiry removed, but the account and his payment history are not showing up, and that's hurting his credit. So that's the reason I tell you guys, be very careful when people say, oh, I can remove a hard inquiry off a new account and stuff like that. Trust me, you do not want to do that. Maybe I would at least give it some time. Give it 9 months. Give it 12 months if it really bothers you or whatever. But at the same time, just remember, hard inquiries are only impacting your credit for up to 9 months. And if you got the history and stuff going on and stuff like that, the payment history is good, and I always tell people, make sure you're making weekly payments on your accounts if possible, because each credit bureau doesn't report at the same time. So this is very important. Now, let's talk about in terms of like having multiple accounts, applying for multiple accounts at the same time. All right, so here's something. When you apply for multiple accounts at the same time, again, you have hard inquiries, right? Not only are you going to be impacted by hard inquiries, okay, with bringing your credit score down, but that new account is like re-aging your credit. So when you get approved for that account, your credit score is going to go down temporarily. Usually about up to 6 months, you may see a difference in credit and stuff. But once you start making the payment history and stuff like that, then you would see like why, okay, my credit is starting to get back up and stuff like that. Because there's a lot of people like, well, you know, I'm making my payments on time, I haven't missed any payments and stuff. But then when I look at the credit file and I'm seeing like 3, 4, 5 different accounts that have just recently opened. I'm like, well, here's your problem. Those accounts were recently opened. So that's the reason that's the impact on your credit plus the hard inquiry. Now, here's something that I really want you to know. A lot of you guys, once you get approved for a credit card and stuff like that, so you may get checks in the mail that offer you a zero interest, okay? Zero interest for maybe about a year. Now, and say that it's a $10,000 credit card. So you can borrow that whole $10,000, but what's going to happen when you borrow that whole $10,000? What's going to happen is going to tank your credit score. And because that tanks your credit score, your other creditors, your other creditors could change their interest rate, okay, and increase your interest rate, because this here account, new account that you went all the way down to borrowing the whole thing, it affects your other accounts, okay? So just keep that in mind. That's the reason I tell people, even though it's zero interest on that $10,000, you don't want to go over that 30% threshold. Okay, now if you have a means to where you got a strategy, you're going to be able to pay the money back sooner than it reports, then hey, it's all good. But if you don't, just be careful with this, okay? And another thing, here's another thing. Say that you only borrow that 30% of that $10,000. This is another thing. And say that you still have the credit card, and say that you use another, say, 5% of it, just doing charging purchases. Well, those charging purchases, you have to pay those off before you get to the 0%. And a lot of people are not aware of this. So if you use 30% with 0% interest, then if you use anything beyond that, you would have to pay that off at the highest interest rate. So that highest interest rate could be about 23%. So all your other purchases would be 23%, say that you use $2,000, right? So that $2,000 you're paying off at 23%, you have to pay that off first before you actually pay that 30% off at zero interest, all right? So, and most people don't know that. It's never been explained, but I'm sharing it with you. Now, if I'm doing a good job, guys, would you give me a thumbs up, comment, let me know if these are some things that you think that can help you to actually boost your credit score up at least 150, 200 points. I really think it can if you're just doing these few things here. Okay, now like I said, you can add authorized users to help boost up the credit and stuff, but just make sure the account has good payment history for at least 2 years. Okay, that's very important. All right, so this is Houston with Three-Way Funding. Again, if you guys have any questions, we have a consultation link below if you want to set up a one-on-one consultation to talk about your personal credit or business credit. Again, for those of you just finding the YouTube channel, welcome. Please subscribe, like, and comment. For those of you that's always supporting me, as always, salute. Thank you.